All right, everybody. Let's get right to this. So these are the indicators. The first thing we need to do is always look at the news. Let's check that out. And so today something big happened. The unemployment claims came in. If you guys have any questions or anything, this is basically for you guys to ask questions and for you guys to talk to, just not me. So we have unemployment right here. And we see that this just happened. They expected 222,000 people, but 3,000 more people are basically taking unemployment. And so that's not really good. It's not really bad. It's like we already expected. So that's not going to probably move the market really crazy. So we need to look at that because we don't want to be in a trade when a red folder's, about to happen. It's going to be crazy. You might win or you might lose. If you're in a trade that you're kind of like stuck in, I would advise you to do like a stop loss and a take profit, like really close. And then whichever way it goes, you're not going to really lose that much money. So that's why the market's going to be moving right now. Now, what we're doing is we're going to get ready for the opening bell, which is at 6:30 my time, which is going to be about 27 minutes. And that's when, we're going to trade right after it happens. So if we look at 5 o'clock, we got a bot signal that the trade's going down. Now at 5:30, this is when the news came out, and you'll see it's a bigger candle. It really didn't affect the US 30 that much. It affected more like right here. Look at this big candle at 5:30 when the news came out on gold. It went up, it went back down really quick. Sometimes this will wipe you out if you have a take loss or a take profit and a stop loss. So that's why you really don't want to trade in those instances. You really want to be careful. The market is still moving right now, and that's a good thing. We want to basically get in the market when it's moving because we can make more money. We see the last trade that it took on the 15 minutes is a sell. Will we have won? It told us to get in right here. Yes, it went down, for almost 3, 4, 5 candles down here. But if we would have got in right here for a sell, let's say it told us to sell, on this one, and we got in, and then the news happened, it went way up here. It probably would have knocked us out before it went back down and we started making money. Because we don't want our stop loss to be that far apart. Now, the way that you could kind of trade the news is to have low lot sizes. And if your lots are low, then you could take it when it goes up because it usually comes back down, or it usually goes down and comes back up whenever the news cycle hits. And also when the opening bell sounds too. When the opening bell happens at 6:30 our time, you'll see that it'll probably go one way and then it'll start going another way. And usually you can make some money if your stop loss isn't too close. And you got like a good take profit, or if you're watching the market and as soon as you hit your number that you want to make in the day, you can get out. That's probably a reliable thing just based off of, support and resistance. Now we can see that there's a lot of buildup in this area right here. If we just put a line, we can see that a lot of stuff is hitting the top right here and going back down. So for this to give us this signal already, it's like we didn't even have to get in on this candle. We could have got in on this next candle. We could have got in right here again and went down, right? We already had like a measurement of where we should be getting in at if you want to use it like that. But this is an EMA bounce signal, the second signal. The signal that's going to make you more money is going to be, here goes another one. Told you to get in. It went way up here. So you would have needed to get out when it was up here, over here for you to make some money. It started going down after that. With this one, it told you to sell right here. Well, you could have got out anytime in the first candle, or the second candle went all the way down here too. You could have got out there. This candle right here is telling you to go down. You could have got out on the next candle. You could have waited out and got out somewhere over here. Here goes another good sell right here. These are all good ones. I'm trying to show you The thing that's good about the EMA bounce is it's going to give you way more signals. So you got a lot of more wins coming in. And we haven't even seen on the 15 minutes, we haven't even seen yet. Here goes the first one, the bounce strategy, right? The bounce strategy is the one that wins 90% of the time. The sell EMA bounce, when you see that, that's going to win 84% of the time. So what you'll see is when the bounce strategy happens, you'll see like usually big wins, like right here. And you'll see it'll say 3 points or 4 points. You get in at this price right here, and you see it just, the market collapsed, and you could have made a whole lot of money. And what you'll see on the EMA is you can make money, but it's not going to, like this one, you could have made a lot of money, but you could definitely see like this is coming from way up here down here, and the EMA bounces are doing less, like right here to here, right? This sell to down here. Here goes another one, good one, sell, buy, but we really want to find the ones that I really want to trade the most. Now let me try to correct the size of this. Okay. Another one. You really want to get to, these are good buys. Let me show you. Like this right here, right? This is the bounce strategy right here. When this hits, it's going to make more money. Like, look, it started way up here. It's telling you to get in, and it gets way down here, right? So it's a different strategy, and it wins way more. So we're just looking at gold right now. Here goes another one, right? You always got to look for where it says 3 or 4 points. That's how you know if it's the bounce strategy. If it says buy EMA or sell EMA, that's the super trend strategy. So here we go again. Sell, boom, right? Another one right here. Buy right here, boom. See this buy right here goes up probably like 3 candles, 4 candles. You would have still made money all the way over here, basically. But it's just not going to make, you're talking about getting in right here, and the highest you could have got out is probably right here, right? You're not going to make as much money on that one usually. Like right here, it tells you to sell, and you can get money all the way down here, but then it kind of comes back up. Here goes another sale. You made money. But, you know, these are going to win 84% of the time. You see, we haven't even seen one that really lost if you get in and out at the right time. But like right here, look at this. This is another bounce strategy. Look, get in right here. Look what happens. So these are 5 to 6 point trades. They win 90% of the time. But when you take these trades, you can stay in a long time. You know, but the bounce strategy, I mean, the EMA bounce is going to get you money like all day long. You know, but it's going to get you, you know, you might want to program it to get you $50 to $100 a time. Here goes a bounce strategy that won, but it really didn't win that much, right? It's telling you to sell, and it went all the way down here. Yeah, you were always in profit, but if you didn't get out, if you thought it was going to keep on going back down, you got to have a stop loss. Like once it goes into profit like this, you need to put your stop loss like up here. So then if it goes back up, you know what I'm saying? You're not stuck in that. We're just looking at some trades. Let's see. Here goes a 4 hours right here. We see wins all the time. But look at this right here on the 4 hours for the sale bounce strategy. Look how far it goes down. And I don't know why I can kind of hear an echo.
That's probably me. Let me turn off my mic.
Yeah, go ahead and mute unless you want to talk, and then as soon as you want to talk, you just turn it back on. Pablo, I just let you talk too if you want to unmute yourself when you want to talk. All right, so here goes another one, the bounce strategy, right? Look how it goes down. And see what the bounce strategy, like when the Autobot is trading, like the take or the stop loss will be measured, you know, it'd probably be like up here. So it never hit here. And then what it does is it takes money when it's 60%. So the Bollinger Band from right here to right here will be 100%. Because everybody needs to know, you know, what take profit and what stop loss, right? So this would be 100%, right where it took the trade all the way to the bottom. The computer is going to analyze that the bot is, right, and it's gonna basically do the stop loss, the take profit at 60%. So this is probably like 60% of that line from here to here. 60% is like right here. So as soon as it hit right here, it's gonna do a partial take trade where 60% of the profits is gonna take. And then if it goes back up here to 10%, close to where the line started, probably like right in this area, then it's gonna take out the rest of the money, and so you got a double win. Now, another thing that it will do is it will take out the trade, part of it at 60%, and then when it goes to 100%, which is right here at the bottom of the Bollinger Band where the trade starts, then basically would have took out the other part of the trade, the 40%. But what you see here is it got the 60%, then it went back up right around here, and you would have got the other 10% right here. So that wouldn't have been like a total 100% win in our category. And you guys got to know how to do that. And it doesn't have to be as complicated as what, I made mine to be. Because what you guys could do is you guys could be in the trade and just, take profit at the moving average line. So you look where the moving average line is, and it's very simple to do. I'll show you right here what I mean. So if we take this trade right here, the moving average line would be if we got in right here, we get out right there. So we measure where that is. Now, how do we know what number that is? Well, look all the way to the right of the perforated line, and it shows you exactly where that is. That's $2,498, right? So now you're going to put your take profit at $2,498. Well, how much are you going to make? Well, right here, it was at $2,521. You're going to get out at $2,498. Now, how many pips is that? That's about 2,300 pips, which is a lot of money, or it's $23, which is a whole lot of money on gold. It doesn't seem like it's that much, but we're on the 4 hours. That's why it doesn't seem like that, right? Now, obviously, if you take a 15-minute trade, then you're not going to be making that much. So if you got in right here on the EMA, the way to do the reward and stop loss, this is what I do. So I would look at a measuring thing and I would go up. What I want to do is go up halfway in between the top of the Bollinger Band and the moving average, this blue line. So that's about right here. So this is where if I'm doing a sell, I'm going to put my stop loss at 2,660 on this right here. Right? And it's telling you where to get in. It's telling you to get in. This number right here is 2,656. So you're talking about getting in and the stop loss basically being $4. Now, where would I get out of this trade? Well, I got in right here, and what I want to do is get in or get out at the bottom of the Bollinger Band. So I'll get out right here. And so what is that? That's $4 down. $4 down. So with the EMA bounce, sometimes you'll get out lower or less with the take profit, and you got the stop loss a little higher. Okay, if you understand what I'm saying. But when you're doing the bounce strategy, then it's really not like that. The bounce strategy would be different. Like you would, if it's not working the first 2 or 3, because this one, if you got in right here, right, it went back down, you could have got out the first one, you could have got out the second one. But by the third one, you should be out of here. It's already going back up. You already seen it, and you're like, oh, this might not work. But if you want to stay in here, you're going to measure it out, and let's see if we could have had anything kind of happen. If this is 100% from right here, your stop loss is going to be at least just 50% of this. So $12, you're going to go $6 up from here, and let's see if we would have lost. So $6 would have been right here, and it hit right here on the $6, so you would have lost. If you would have had a little higher one, you could have been in getting all this. But you don't want to stay in a trade too long. You want to get out and just lose a little bit of money instead of trying to stay in a trade and losing a lot. I got this one trader that I help trade, and what he does wrong is he'll win. He could use anything, these indicators. He could use my strategy, and he'll win. Like, he'll show me, he'll win like 90% of the trades, right? And he's making like, but he calls himself a scalper. So he'll make like $50 on a trade. Every time it goes to $50, he's out, right? But then his stop loss is like, he doesn't have any stop loss. He doesn't even use a stop loss. So let's say you won 9 trades in a row at $50, but when he loses, he might lose $500 on one trade. So that's not profitable, because 9 times 50 is $450 he would have made. But the one time that he lost, no stop loss, and he just keeps on letting it go the wrong way, he would have lost $500. So that's not a good way ever to trade. You never want to do that. You want to, either break even with a stop loss in a reward system. So that means 1-to-1. So if you're going to make $50 like him, then your stop loss should be set at least $50 to lose. Okay? If you're going to make $50, you really want to only lose $25 when you lose. And that makes it so you don't have to win so many trades, and you're still going to be making money. But you never want your stop loss, or when you get out of a trade, to be so big that you got to win like 2 or 3 trades, and then when you lose one, it wipes away the 2 or the 3 trades you won. It's just bad risk management, and that kind of person probably has money with their finances anyways. Not saying they're poor or anything, just saying like when they probably get money, they probably spend it up real quick, and so they got like more debt than and those people are the ones that like get in trouble with credit card debt and stuff like that. So if you're that type of person that gets in trouble with credit card debt, things like that, then you might want to make sure that you're making more money on a trade than you're losing when you lose on a trade. So let's look. So what do I trade the most? So the things that I trade the most are US 30, and let me just put it in order. US 30, then gold, NAS 100, BTC, SPX 500, and Apple and Euro USD are probably all the same. And I barely trade US oil. So I like to trade, like the bot only trades US 30, and it trades it only at the 1 hour and the 4 hour. So like on this trade right here, it would have took this trade at the 1 hour, and it would have won for me. It would have took this trade, and I got out of this trade like somewhere over here. So sometimes when it's on the Autobot, I also like will look on my phone, and I'll see if it's stalled out for like an hour or something on a 15 or on an hour candles, and it's stalled out for like 3-4 hours. I'm looking, it's not really doing anything. Then I'll get out, because it's like it's not worth you to stay in and hit a news event and for it to go the wrong way, right? Like I just got out of this trade too. So this was a sale, and it had 2 sales, and I got out like down here somewhere, right? Because I knew that the news was coming up, and it was already down here. I didn't know if it was going to do something radical. So I just got out of the trade. I think I won like $2 and $15 or something. Instead of waiting for it to get to like $50 or $70. Now with the bot, it's going to make different amounts of money. It's never going to make like, it's not set up at like to make $100 or whatever lot I'm using. Like right now on the one that people in the academy are in, the PAM account, then I'm using 0.05 lots. So 0.05 lots. And sometimes it gets out around like $40 to $140. Well, that's a big difference. Like somebody might say, like, how come it won 140 right here, and then it only won 44 right here? Wouldn't it have just been better if you just stayed in the trade? No, this is an Autobot. Now, this is like a $40 trade, because all it's doing is measuring the Bollinger Band, right? So if we took this trade right here, 100% of the Bollinger Band is from here to here. Now you see that it's $266 is the length of the Bollinger Band, right? But like this is a tight Bollinger Band right here. Let me get you to where, let's say we took a trade right here. We just said that other one was 266. Now, if we took this trade, see how open the Bollinger Band is and how wide it is? That's 480. So that's how, like, one trade is going to make $44, another trade is going to make 100 and something because it's double the size. And so it's measuring this whole Bollinger Band and basically doing stop loss and take profits because of the Bollinger Band. So that's why sometimes you'll see, you know, that it's making more or making less per trade. It's never going to make the same amount. So here we go. This is on the hour, and this is what we trade, and we trade the 4 hour. So the signals, one, let's just say this was a Wednesday at 12 p.m. So 1, 2, 3. But it will only take one at a time unless I manually make it take another trade. That's why it's so low of risk and high of reward, because it's not going to just start taking so many trades at a time, basically going against itself. So let's see. So it has a possibility to take these 3 trades. If it hasn't already won, it wouldn't take the other one. So let's say we got in this trade and it never won and it never lost. We could have still been in this trade for, like, you know, a day and a half, basically. Now, the 4 hours is taking trades too. So how many trades did it take? It took 2 trades. Well, that was last Thursday. So this was on Sunday. So there hasn't really been any trade on the 4 hours at all. And sometimes it will light up and then go away, and it will still take that trade. Like those type of trades that aren't going to show up here are always going to show up on the Telegram trades also. So let's see. It only trades the US 30. So all we're worried about is the US 30, because this is trading my top 5 pairs. So this trade right here, would the bot take it? No, because it's only a 15-minute candle. So it has to be a hour candle. So right here, this is a 4 hour candle right here. You see where it says time frame 240. And so that would be 60 minutes times 4 is 240. So this is a 4 hour. So it would have took this right here at 3 o'clock. Well, let's go all the way down to the bottom and look. Let me tell you where the first one is. Not that trade. And we're looking basically for a US 30 trade. This 240. So if you just want to trade like the bot and be very conservative and take the best trades. See, it hasn't took any. You could trade all this stuff is great trades too. You can make money. But if you want to trade just what the bot does, no trade has even came up yet, because it's only trading US 30 and it has to say 240 or 60 or 240. So as we see, no trade has came up yet for you. Okay, so this is the first trade it would have took. It would have took this yesterday. You can see Wednesday. You can just put your thing on here. Wednesday at 5:05, it would have took this trade right here, because it's a 60-minute trade or a 240 trade. So let's see when the next one is. And see, it's not about taking so many trades. Some people love to take so many trades. It's more about taking the best trades. That's how you're going to win. Here goes another one, right? So it took a trade at 9 a.m. in the morning, another trade. So that's only 2 trades from 5 to 9. And here goes another one. So it would have took this trade an hour before. So let's say you would have won this. You could have won that. And that's 3 trades in the day so far that we've seen. And we're going to just go all the way back to like 12. So it wouldn't have took this one. This was probably a good trade, a 30-minute trade. Didn't take it, though. That one it didn't take. We're just looking for US 30 over 60 minutes. Here goes another one. So it would have took this one at 12. So there was about 4 trades that it would have took yesterday on Wednesday. It would have took this trade right here. and that's it. You know, it automatically takes those trades, and that's kind of simpler than you pushing the button every time. But do these trades win? Let's just go look. You know, this is NAS 100. We'll look at that. We'll look at SPX 500, and we'll look at gold, and we'll see, you know, did those trades win? All right, so let's go to NAS 100, and it told us to sell right here. It went way down here. It told us to buy, and it went up, right? And this is the 4 hours, right? Let's look at the 1 hour. Same thing. Buy, and it went up to here. You could have got out. Sell right here, and it's going to do more because that's the bounce strategy like I was telling you. Sell, you would have won. Buy, it went up. Sell. Yes, it won. That's an hour. 30 minutes on the NAS. Sell, went down here. Sell right here, it went down. Buy right here, it went up for 2-3 candles. Sell, it went down. Sell right here, it went down for like 3 candles. You could have got out and made some money. Here goes a good, right? The bounce strategy, sell. And the bounce strategy obviously is going to make you more money. Here goes another bounce strategy. It told us to sell, and we could have got out for like 4 or 5 candles. You could have stayed in and really made some money. This wouldn't have got you out on this. Some people love to stay in. Some people love to get out. Here goes a buy with the bounce strategy, and we seen it went up for 3 or 4 candles. EMA sell. Here goes a buy on the EMA. It went way up. Sell, it went down. Buy right here on the bounce strategy. Could have got out anytime. Anytime it starts stalling out like this for like, this is 3 hours of it just doing consolidation. Like, I'll be out and win a little bit of money on that. I'm not going to just stay in that all day. Here goes another bounce strategy. It went way down. So as you can see, here goes a buy bounce strategy. Went way up, 3 candles in a row. So we see that it's winning on all time frames. Here goes another time frame, and we see sales winning. So it's very simple to trade using this indicator because it's telling you when to buy, when to sell, right? And it's gonna, and as long as you got a good take profit and stop loss, you only lose a little bit and you win like double the amount, or you win 1-to-1 or double the amount or 3 times the amount when you win compared to lose. You're gonna make a lot of money. The only time you're gonna lose on this signal is if your stop loss is so bad to where, look at this. Okay, the market is about to open at 6:30, and we're gonna look, and we're gonna probably, let's go to gold, and we could take a trade if anything was lining up and it told us anything, because right now the market should go kind of crazy. Let's see if we got anything telling us to buy or sell. We don't have anything on gold telling us to buy or sell right now. Let's see. This is what I do. It just is happening right now. You're going to see everything start moving. This is a sale that we see on the 1 hour. Right here, it told us to sell. That was a couple hours ago. So I would probably get in for the sell, but I would map it off, and I would say, like right here, I would say I want to sell when it hits right here. Because I know, like, this market, like, look at how fast the market's moving. It just hit 6:30, and the market's going to start moving. And so I see there's a lot of pile up right here, and it told me to sell last time, and I want to sell right here. So if you guys are trading demo or trading anything, you guys want to sell if it goes up here. There's no good just random way to buy or sell down here. We got to look at the 4 hours first. And we do see a little pile up right here. It hit a couple times right here and went back down. We see a buy right here, buy. So if it does go up here, I would sell. All right, let's look at the 15 minutes, and we can see that the market's kind of moving really fast right now. And we got a sell here. Look at how the sell here from the bot. I already mapped this out, and we're seeing the different time frames that told us to sell right here at this line also. The bot did. That's something that I see from support and resistance, and maybe you guys can't see that good, but once you got a trained eye, you guys will be able to see that support and resistance but the bot kind of tells you too when is a good buy or a good sell also. So the market is moving pretty fast right now, but you know, it moves faster on different times. Now, let's just look at something else real quick, because I wouldn't take it. I would put a sell limit right here, but this will probably, US 30 is usually going to go up because it's been going up for years and years and years. So I would get in to go down right here, but then I would also find something where there's a support down here to go up. Okay, and what we see right now, it's in that area that I would start taking the trade up. Like right around here, I want to take a trade going up. This is a good area right here. Let's say we got in right now, and I'll show you what I mean. And when you guys start trading with me in the morning, I would have told you, like, go in right here. Maybe put the stop loss like down here or something, because if it keeps on going, you want to be out. But we would be in profit right now. It would be going up right now. We would already, and you might already get out. That's enough profit. Like, that's going up a lot of pips just for it to go right here. But you might want to get out where it started at. Now, let me show you another strategy that I'll be teaching you guys over time. And we won't be trading every day in the morning, but we will be. I'm going to try to trade at least once to twice a week in the morning with you guys just during this time. Like, we'll jump on like at 6:15, and then we'll jump off, you know, at like 7:30 or something like that. Okay, so this is good right here. We would have got in again down here, and we'll see for it to go back up, or we would have had a stop loss that just loses a little bit. But when it goes back up, we would have won a lot. Now let's look at Apple, and I want to show you guys. Apple just started. Apple is one of my favorite trades because it has a stop gap right here. There's a gap. What does that mean? That means that at 5:30 yesterday, the trading stopped, right? And it gave us a signal that it's going to go up. Now, in the morning when it started, it just started at 6:30, right? It started down here. This is where the trade started off. So it started at 225, and yesterday the trade stopped at 226. So there's $1 to where it just started way lower than where it ended yesterday. And this buy signal, you guys could have won off of it, but this is a big gain right here. You're talking about this going up 60 cents already. Now, why do I say that Apple and stocks are pretty simple to make money off of? Usually wherever the stop gap is, right? This is just a trick of the trade, you guys. A lot of people don't even talk about this, but anywhere where this stops at, you know, there's this mentor trader. He's one of the best traders in the world. And all he does is trade the opening of stocks. Okay, so if this was way down here and it started and it gapped right here, all he'll do is he'll get in this trade for it to go 50% back towards here to where it ended at. So it ended yesterday at 226.80, and he would have got in the trade as soon as it started at 225. And right now he would probably be getting out of the trade. So he only wants 50% of from where it starts at to where it ended yesterday. So you see that it usually, and Apple is one of the biggest stocks in the world. Other ones are the same, but it usually goes back up to where halfway to where it ended yesterday. So let me show you what I mean by that. Here goes another one. It ended yesterday right here. Okay. It started the next day at 226 and it ended yesterday at 233. So it went down like super, you know, right here. It started right here. Now, if you would have did that, would you have won right here? No, because all it did is keep on going down, right? But most of the time, like at least 70, 80% of the time, it's going to go in the direction. Here goes another one. It ended right here. It started right here, right? This was the top of it. No, right here it started. It started right here, and it did go down, and he would have got out as soon as it went down a little bit, but then it went back up. So this is a stop gap. Here goes another one. It ended right here this day, started down here, and then look what happened. It went all the way back up. So he would have stayed in this. It would have kept on going up. He would have made a lot of money. Here goes another one. It ended right here, and it started up here. And what happened? As you see, it went back down to close to where it was starting at. 50%, you would have got out right here and made some money. So this is called the stop gap. Here it is again. It ended right here yesterday or that day. It started right here. And what happened? It went back up. So we even got to buy. So stocks are cool because they have this thing called a stop gap. And it usually tries to pull back. Like right here, it stopped that day. It started up here. And look what happened. It went back down really fast. So, you know, that's a stop gap. You guys could make a lot of money doing that, trading with me. We'll be using that. Like right here, you know, it tells us to buy yesterday, right? And it stopped right here, went way down here, and look at all the money you would have made. That's crazy money on the stock. You guys don't understand because this is saying this is 200. Usually we're trading stuff that's 2,000, 40,000, 20,000, right? 5,000. So stocks going up this much, it can make people rich. And what we've seen is we looked at 4 events during the week, and 1 of them didn't do right, and 3 of them did. So if you would have had your stop loss and take profit, you would have made a lot of money just on the stop gap principle of trading. That's what I call it. It's just based off of support and resistance and the stop gap. Okay, does anybody have any questions about the stop gap or anything that I'm going over right now? Everybody's on.
I got one.
Yeah.
I remember you covered it a while back. I don't remember the details, but I wanted to know how soon as the market began to move after the news puts the information out there.
It's in seconds.
10 seconds?
No, in a second. Like right here, the market started at 6:30 and it started moving at 6:30. As soon as it hit 6:30. Now, 5:30 this morning is when you had the news event. And as soon as 5:30 hit, the news comes out, like I'll show you right here. So the news comes out at 5:30 on the dot. So as soon as this unemployment red box came out, the market started moving immediately. The next thing that's going to happen is right here at 7 o'clock. So let me fix this because it has the wrong time. It's okay, 6:30. Okay, so at 7 o'clock, it's going to do this red folder, and we'll see at 7 o'clock it's going to move like crazy again.
Understood. Okay.
So see how like it's doing a countdown 5 minutes, 27 seconds.
Okay, what's that for? That's the countdown
to this news event right here, this orange, which isn't going to be a big deal. It's a medium impact, but these, you'll see it says high impact. And so that once this timer is done with this, it will be right here. And as soon as that timer ends, that's when the market's going to move. It doesn't wait any time or anything. Yeah. So like right here, okay, we could have got in right here. This is the bottom of it. And we will be waiting for this to come back up. Now the market's going to move like crazy for like maybe an hour, hour and a half. So if we would have got in right here, we're predicting this to go back up, right? But if we would have already been in this event and not got out, it's like we would probably be trying to get out right now because this is probably the lowest that it should be going. It's super outside the Bollinger Band. It needs to come back in just to be in a regular trade. Just like when it came out right here, it had to come back in. When it came out right here, it had to come back in. So this is kind of way outside the Bollinger Band. And, you know, we got in, like I told you, like somewhere around here or somebody here, you know, when it gets up to like right here, it takes hours of the day for you to be in a trade, 2 or 3 hours for you to make a pip from this amount to here. So the opening bell is so volatile, you can make a whole lot of money on the opening bell. Let's see what gold did on the opening bell. So this is the opening bell on gold. It went up and down. So if you would have got into gold, let's say you got in when it went down here, you could have got out already. Or if you would have got in when it went up here. See, gold is so flexible on the time. This is the major news event. So let's just say you got in at any of this time on gold. Like if you got in to go down here, you would have made money. If you got in to go up here, you would have made money. And what you see is it's flexible. It's going to be staying in the same direction during the news. So that's why a lot of people love to trade gold on opening bell in the news, because even if they pick the wrong way, let's say the trade started right here at 5:30 when the news came out. Let's say you said that you wanted to take gold going up, right? Would you have made money? Yeah, because it went way up here, you could have got out. Let's say you took gold to go down. Okay, yeah, it went up here, but guess what? It also went way down here. So as long as you didn't get stop loss, you would have made money on gold because it went both directions. That's why people love to trade gold, and it's the easiest thing to trade. But if it's not in the opening bell, then the thing could just go wacko. It could go straight down or it could go straight up. But during the opening bell and during, you know, the news events, it's usually going to stay like right here is opening bell. If you would have took this trade, it started right here. If you would have took this trade up or down, you would have made money going both ways. You get it?
Yep.
Yeah. So gold is the easiest thing to do on opening bell and on news events. Now look, this
You
is
can also do that on US 30, correct?
no US 30 is different.
Not US 30. Okay.
Yeah, only gold is gold is
So gold
called
is
like a rubber band. It's very flexible because look what happened in US 30. We could have got in to go up. We would still be in. I probably wouldn't have my stop loss even that low. So we could still make money with this. But as you see, like it's been going down for almost the whole time.
right.
Now, is it going to go back up? I could tell you, like, I would like to take this trade up. Even still right now, I'll take it going up because I believe that it's going to go at least right here, or it should be going up higher.
It's broken through the Bollinger Band, the support Bollinger Band, so it's definitely got to go up.
Yeah, but it can still go down. Like on the opening bell, like let's look at yesterday at 6:30 and see what happened here. So this is 6:30 yesterday. This is a crazy opening bell. Look how much movement it has. So it started out up here and went way down here like it did right now. Remember I just drew this line? This is the same place I told you to go in to go up, right? So let's say we got in right here. Are we going to have our stop loss? No, we probably would have lost this trade. That was super crazy down, right? But if we would have got in, like we've seen all this build up over here, everything's hitting this and going back up. If we would have got back in the trade, let's say that we say, oh, well, we get out right about here. You know, we lose like $50 or $100 or something. And we just wait for it to continue to go all the way down. And we seen that it hit our support. And then we got in right here. Now you got money going back up and you got way more money than you lost.
I see.
But it's not so up and down on the same 15 minutes or half an hour. Does anybody have a question? Yeah, see, this is still traveling down. I'd probably, not yet, I wouldn't be out. If I got in like right around here, I would probably still be in this trade. But if it goes like to right here, I'll probably be out of this trade. And then I might take it back up down here to try to recoup some of that. But the US 30 is different. Like you more want to be precise on what's going to happen on that. Go ahead and mute yourself if you're not saying anything, but then unmute yourself when you say something. So here we go on NAS 100. Same thing happened, right? Big candle. You see when the opening bell is super bigger than anything else that's going on. And so you would have got in right here. Let's say you would have took it up. I mean, you would probably be out right now. Somewhere around here because it's stalling out. And you might even want to take this back down because it hit the Bollinger Band. Right? Let's look at BTC. BTC might move on like major news events. It really didn't move that much on the major news. Opening bell, you see it started moving a little bit more. But not too much movement on BTC. This is the top 500 companies. Is there some movement on here? It's all right. But you see this candle right here when it opened, it's pretty big. You know, Apple did its thing. It went back up. It tried to reach back up to where it was, and now it's stalled out. I would have got out of this trade. Euro USD, really not too much going on. US oil is just going straight up. So, you know, the best thing to trade during the opening bell is gold for me, and US 30 and NAS 100. Those are usually, you know, these three right here are usually the best ones to trade. Now, an advantage you could have is that a lot of people don't really talk about or do is this heat map. So you go to TradingView, okay, and you go to where it says products, and where is it at? Okay, so you go to products right here on TradingView. This is the home page of TradingView. Like, if you just go to the website, instead of going to the charts, the website will open up like this, tradingview.com, right? Now, how do you get back to the charts? To get back to the charts, you go to products and you go to super charts. That's going to put you back to where we were, where we're looking at the strategy. And then you're going to click twice right here because you don't need any other indicators. You just want, you know, the one indicator that we have. Because it won. Boom. Right? Okay, so now how do we get to basically a secret? Let me show you guys. So I always look at this because this is for trading NAS 100 and US 30. Okay, so you go to products, you go to scanners, and you go down to the bottom. It says heat maps, and you click on stocks. Okay, now this is the 500 top companies in the world. What do you think we should do? Should we? Red means it is going down to sell. Green means it's going up to buy. What do you think we should do? Should we sell or buy S&P 500 today?
It looks like you're supposed to sell it.
Looks like you're supposed to sell it, right? Yep.
Yeah.
Yep. Now, sometimes, you know, each company weighs different. So Apple and Nvidia and Microsoft, Google, Meta, they're way bigger, and Amazon are way bigger than all the other stuff. So if the big ones are lit up green, but you can compare to the whole map. Like, you see all this is going red, right? Blue or gray means that it's not 1% up or 1% down. So it'll just stay, you know, gray. So, but we see whole boxes of stuff, right? But Nvidia is 3% going up. That might be more, like this going up 3% and these being at 1% going down. This might be weighted more than all this together. So, like, when I'm looking, this says 3%. I'm saying delete all these red. And is it still more red than green? Yes, it's definitely more red than green. Now let's look at the 100 companies. So the 100 companies, right? This Nvidia is pretty crazy because it's 3% and this is 2%, but nothing is really, you know, the reds are just 1%. There's nothing really big that's bigger than 1%. So this is probably like at a standstill, I would think. Even though there's more red here, this weighs so much more, and these are 2% also. So I probably wouldn't even, you know, this looks like just a stalemate, like it's really not doing too much. Let's look at the top 30 companies. And as you see, every time we go to the littler one, all the 30 are in the 100, all the 100 are in the 500. So here we go right here, right? This is the top 30 companies in the world. And what we see, you can click on any of them and it tells us some more information. So what do we think's happening right here? Now look, Nvidia isn't even in the top 30 companies, US 30, even though it's one of the biggest companies in the world right now. Well, but it only been one of the biggest companies in the world for like the last 2 years, because that's the one that makes the AI chips, and AI is brand new, and that's why they got so rich, right? So they're not even in here. So that 3% going up on Nvidia is not in here. So what do we think US 30 is doing? Well, we can look at this heat map and tell US 30 is losing its butt today. Nothing is gaining money. Everything is either even or losing. So if we look at US 30 now, let's go to US 30 and let's see if this is going to make sense to us. US 30, according to the heat map, is going down. Look at US 30. Now, would we take US 30 going up if we looked at that heat map? No. It wouldn't make sense. It's like all those companies have to turn around for it to go back up. So before we would have took this trade that I was saying, oh, let's look at this right here. Like when we're trading, that's how we look at the news. You know how we go here, and then if we were trading Euro USD, we would go to the live charts. And which one's stronger, right? You know how I told you currency strength matters, right? Well, for currency strengths on stocks and indices, it's the heat map. It shows us that same picture. Is it red or is it green, right? Obviously, we would not take this going up if everything's red. Now, if Apple started lighting up, if Microsoft, but they're 0.2 negative, 0.08 negative, it's like they got to dig 1% negative. Bro, this is $1 billion company, and it just lost 1% of its company today. You know, the market cap is $1.9 trillion. So for it to lose 1%, that's a whole lot of money. Like on its stock, that means that it lost $2 because the stock is worth $182. This thing lost $2 today already. Like, do we think it's going to pull back $2 that quick? No, probably not. It's probably going to stay red for most of the day. Walmart's in red. JP Morgan's in red. Home Depot, McDonald's, Disney, everything. Coca-Cola's 1% down today. How come? You know why? Because the unemployment came out on Thursday. Every Thursday, unemployment comes out. And unemployment said that these people laid off more people. We can read it on the news. Let's go to the unemployment. And it tells us U.S. Unemployment Insurance Weekly Claims Reports. Bonds drop. U.S. dollar pops as traders brace for jobs report coming up. We can read these different events. Is this a good thing that happened today? No, because previously it was 219,000 people unemployed. It forecasted that it was going to be worse than that. It said, probably 3,000 more people are going to be on unemployment this week. And then boom, it even went higher. So it predicted and then it went even 3 more than what it predicted. So this is 6,000 more jobs than they predicted. So that means, who does that affect? Who are the people that are losing money? Well, people like Apple. And we can read these things and it will tell us like, well, Apple, lost so many jobs this month. And then, these people got laid off, or, the oil sector or the energy sector lost jobs. So that's why when it comes out bad news, that it goes down and it doesn't look good for the whole economy on the stocks. So here's the heat map. And this is like a secret of the currency strength meter for stocks. I want you guys to always remember that. You could read about, how many people, how many employees are here. And then you could also click on Microsoft or look at the Microsoft website and find out how many jobs were lost in the energy sector. How many of this, how many of that. Let's go back to the 100. Now, as you see, Nvidia is doing so good today that, this might be going down, but it might be like at a stalemate, because look at how much money this is worth. $3 trillion. This is up $4 today. And the stock's only worth $123. It's up $4. It's up 3%. This is huge because the market cap is $3 trillion. Now let's look at another market cap. Like it's almost as big as Apple. 3.4, right? This is the biggest one, and it's not really doing nothing. Even Microsoft, $3.1 trillion. Right? Let's look at Google. $2 trillion market cap. So Nvidia is 1/3 bigger company than Google's whole intake. And Google runs the world. Look at Meta, Facebook, 1.4. This guy made $79 billion this year. Mark Zuckerberg from this company. But look, it's half. as big as Nvidia that's making the chips. The stock price is way bigger. They're probably going to split and go back down. But, you know, this is the stuff that we want to look at. We want to make sure. Amazon, everybody thinks that's the biggest company in the world. Well, it's only a $2 trillion market cap. The people that make the chips are worth more than them. So you got to look at stuff like that. So let's look at the Nas. It's not going to be going down as fast as Dow Jones is. And see, it's even, look, it's going up because of Nvidia. Nvidia made this whole thing go up since the opening bell. Even though if we look at the heat map, it's like, man, you might think that there's way more red. No, because this red is 0.5. This red is 0.9. These are little bitty points of reds. But when you look at Nvidia, one of the biggest things, it's up 3%, which is crazy. Like that 3% is probably would make this whole screen look green. Because it's 3 times, even if it was 1%, that would make it might go up. But 3 times that, you would have to put 3 of these boxes of green. So 1, 2, and then 3. So this whole board right here would be green if you had 3 times that. That's how you look at this board, because these aren't really telling you anything too much bad. AMD, you would have to put 3 boxes in here again. So 3 boxes the size of AMD, you know, almost 2 boxes this size, and you covered the board basically of all the stuff that's barely red. See, none of this red, like if this red was 3 times, you would have to put 3 of these boxes across. But it's not. It's just 1. So all this counting for is this red right here. So don't be fooled by this just because there's so much red. You got to also look into the biggest ones and see what percentage of green there are. And start overlapping in your mind where it should be at. Let's look at the 500. And so we see everything is red, but these are little reds. 1%, 0.8, right? We're seeing all these little reds. This green right here, we need to click on it. Let's see. It's up 3%. So this right here would be 3 of these boxes would fill all this stuff up. And these are gray, right? Nvidia, it would fill up this whole area right here. All this would be Nvidia. It would overtake Apple. This whole box would be green, right? Nothing, even Google is just a half of like this box right here. You wouldn't even count this whole box as one thing. You would count it, you know, ACN 1.5. So if we look and we see the 500 might not be shooting up like the Nas because of Nvidia is so powerful in the 100. It might be just, yeah, see, it started right here. It went up, went down. So it's just stalled out. It's going up and down. Really not that big. And you can make money by looking at the heat map on the 500. You can say, well, nothing is, it looks like it's going to just be staying up and down. Nothing is really popping out at me. So I'm going to go up. And when it goes up, I'm going to take my money. When it goes down, I'm going to take the money, right? That would be your strategy on the SPX 500 today, just off of the currency strength. Now it just started moving fast. Oh, that's the news. So look, now 7 o'clock. Ricky, you see what just happened? You see how fast this thing is moving?
Yep.
That's because of this. Watch this. We'll look at the news event that happened right now. This one right here, 7. Look, it predicted 51.7. It went to 54.9. The ISM services, we can read what that means. That's a big event. And so now when we look, it started moving really fast. Let's look at US 30. Might be coming back. See, now it's coming back. Look at that. See how it went down and it's coming back. So even if we were still in this, we could have been making money because of these news events concurrently running against each other. Here we go. Look at this. This gold went way down here and popped back up. If we would have just looked at gold and said, you know, right here, we want to get in right here. It went down super far. If we wouldn't have had our get out, take profit, we could have had it going up. Look, we would be making money right now. Or we could have took it down like where we see all this build up right here. So this is the opening bell. And look at Nas. We could have just been continually going up on Nas because we seen Naveed is just so crazy powerful right now. We could have just stayed with that. US 30 is trying to get back up. It's trying its hardest. I like US 30.
Just make money off of that.
Which one?
Gold.
Oh, yeah. Gold, you could have made so much money because it's elastic. Let's say
I took it going down.
Yeah. Beautiful. Yep. And so you took it going down. You could have got out way down here or over here somewhere, you know. But now it's going to go back up. So I would have been out of it because gold.
I got out.
Yeah, gold is elastic.
I missed that dip, the big dip. It went down to like 26.30 something.
Yep, 37 right here. And now it's it's $10 up right now. It went back up. So like, yeah, so you could have got out down here, right? And then you could have got back in because you see that it's nowhere like this. Like you can go back for days, right? And so what you see is this buildup. You go back to the 4 hours and you say, oh, shoot, there's a buildup right here. There's a support right here. It didn't even reach down that far, but you know when it gets close to this, you could have got back in to go back up because it's so elastic. It's going to go down and up. But then in the middle of the day, don't get caught in gold in the middle of the day because sometimes gold just keeps on going the same direction in the middle. But usually, you know, on the opening bell, like you can look and tell kind of where the opening bells are. And they're going to do the same thing over and over and over again. Right? So this is a big candle. Gold is very elastic, the easiest thing to trade on these opening bells. Well, here we go, right? Let's say we got in where we were talking about. Look, it's going back up. The US 30. And now let's look at the heat map and we'll see that on the heat, look, Nvidia, 4%. That's why that's just crazy. For it to go up 4% today, I mean, some people got so much money. They got somebody got like 100 million in there and they just made, you know, $3-4 million just off of that going up real quick. It's craziness. Let's look here. Why is it going up? Nothing's really down. It's just like everything is kind of in the middle, in between. 1% on Amazon isn't that bad. It's like this box. But, you know, nothing's really doing too much. And probably Apple's turning around right now. It's down 0.2. Let's look at Apple and see. Because Apple basically is like the market mover. And as we see, that it started way down here. Now, why do you want to look at the big companies? Because remember, a stopgap, it started way down here. So it might just say it's up 1%, right? Because of where it started at. But you got to also think that it lost all this money yesterday and just recouped all this money back. So it's only going to say 1 or, you know, point something %, but you can see that it just went up $2 or $3 from where it started out in the morning. So that's big. And then we can look at, you know, like a Meta. And we can see, like, where did Meta start out at? Okay, so Meta, oh, we're in the wrong. Let's go to 15 minutes. So Meta started out this morning, right? You see yesterday it ended. It started out right here. And look at Meta. So this is what we have to do. We can't just rely on just the heat map. We got to say, oh my goodness, for, you know, 45 minutes, Meta's been going up. Well, Meta's part of the US 30. That's why the US 30 is rocketing up. But even the heat map isn't even exposing. Well, Meta's in the 100. That's why the 100 is going so crazy. But like Meta right here, it says it's up 0.5%. But you see that it just went up crazy compared to where it started at today. But see, this is telling you what? This is telling you a 24-hour cycle. See, I got it set on the day. So if we would have said 1 hour, look at how different this would look. So on 1 hour, it went up this amount of, It went up 0.5, 0.6. You know, a Vigo went up. So this is just since the opening bell, because it's like 7:06. So we're talking about, you know, even before the opening bell. It's a little bit of yesterday's too. So let's look at US 30 according to the 1 hour, and you see Microsoft is lighting up green. You know, Apple is breaking even right now. It's about to be green in a second because it just caught where it stopped yesterday. But all that is momentum on the trade that you really are not seeing in real life, right? Look at this. This is Meta, how far it went up. You don't think that's going to change the market? Let's look at Apple again. Apple started out way down here, but it's talking about Apple when Apple left yesterday. Apple left yesterday right here at 226, right? But Apple's been going up big time. Like all we had to do is take this buy, but Apple's been going up big time, you know, from 224 and it went up to 226. It went up $2 since the opening bell. Yeah, that's gonna affect, you know, that US 30 big time. But when we look at the heat map, it's really just showing us like when is it gonna get back to here, and then anything over this right here where it ended yesterday is gonna start making it being a percentage of gain. But as we can see that it was already moving up this whole time. So we would have had our stopgap if we would have just said, okay, today the beach, we're just doing the stopgap together on Apple. We didn't have to trade nothing else. Nothing else would have made more money than this Apple right here. If we would have just said it's going to go back up to 50% of where it left off at. It ended right here at 2268 and it started right here at 225.07. If we would have just said we're going to get out at 50% up from here to here, and let me show you how we can know where we need to get off at. From here to here is $1.71. So what I'm saying is we're going to get out when Apple makes 80 cents today. So Apple started out right here, 225, and now we're going to get out at 80 cents right here. We would have got out right here. Brother, we would have been done for the rest of the day. We would have been done. Like, how many times is that going to happen? See, this is a trick, brother. And you guys could teach your family this, because this is something that only like master traders would they don't even tell people. You got to pay people so much money to even learn how to do this stopgap thing, because this is like the people that know stocks. This is how they make most of their money. It's scalping. They get in right at the opening bell for the stock to go back up to halfway where it ended the day before. Right? Let's look. That would have been money right here. Let's look. Let's go back one more day. Okay, this is the stopgap from the other day. So it went down here. And so we would have wanted to go 50% up from here. Did it do that? When it started this day, it started right here. It ended at the same place that it started. Nope. It ended right here. Sorry, this is a stopgap. So it was way up here, okay? And this one started right here. Did it go up 50%? Yeah, it went back up. This is just a little bit of a stopgap. So did it go back up? It sure did, and we would have been out right here. Now that day we wouldn't have made that much money, but this, like something like here, this would have been a more money thing for us. We could have got in. Let's say it didn't move back up. This would have been a bad day for us. Right here, same thing. Here it is right here. Here goes a good one. So it ended right here, and it started way down here. Look at how big this stopgap is. This is where you would have made a lot of money. So 227 ended, and 224 it started. So we wanted to go 50% from where it ended yesterday. And you got to know candles too to know where it ended and started. So this is where it ended and started. It's $2.41. So this will be a big stopgap. We would be so happy when it started right here. We would say, okay, we're going to go up $1.20 on here. I mean, this is just phenomenal money right here. So $1.20 from where it started right here is right here. Look how much money we would have got out at. And did it hit that first 15 minutes? We would have made that money. Look at it. It spiked up here. We would have been out. We're done. We would just set it for a take profit for that amount, and we was out of here. You know, here goes another one. Stop gap from here. This is another huge one. So it ended right here, and it started right here, $2. Okay. Now we're gonna go. What we would have won right here if we would have went down $1? Because we're just doing 50% back. Look at this. The first 15 minutes we're done trading for the day. Over. And we made $1 on a stock that's worth $200. You guys don't even understand how much money you would have made off of just one lot on something like this. It would have been phenomenal. So the days that you lose, you put it in for, 0.25 or something, and you get out. If it loses, and then 50% for it to go back, and you win. Sometimes when it's moving so fast, you just stay in that trade. So this is something that I don't even really teach that much. This is like some secret sauce for you guys that's joining up today. But we are going to be trading the stop gaps together when we see something that's really phenomenal. Like today, I started out and I was telling you guys that it ended yesterday right here. It started right here. That's 180. So I'm saying that the stop gap, we're going to get out at 90 cents. Okay. So right here is when we get out of the trade. Did it ever go down 50? Like instead of 90, we would have had our stop loss at 45 cents. So 45 cents would have been down here. It never hit down here. And we would have been out of the trade in the first 15 minutes of the opening bell. We would have been out of this trade. And then we don't have to trade Apple no more of the day. We got all our money that we wanted. And then we can get to trading US 30 and trading everything else we want to trade. Look at this. I told you guys to get in right here. Well, we would have won today. It went way up here, brother, and touched. Where will we get out at? We would have got out where? Right here. I already marked it. And which way will we have went? We would have went back down. So we would have got in over here, got in to go down over here, and got out our trade to win right here. So we could have still been in this trade the whole time, got out when it hit right here, and then waited and got a trade to sell right here, and it already went back down. We could have got out in the middle, or we could get out when it hits this green line, and it'll probably do it again. And then I believe like today, this is going to rock it up. It's going to be somewhere up here. So that's how fast we trade. And we've been on here. I got on at 6 o'clock just to talk to you guys. But we'll probably be getting on these live sessions in the morning, like at 6:15, and be ready to take some trades at 6:30 when the opening bell happens. And then about this time to 7:30, we're done trading for the rest of the day. That's it. We go to work, we do all the things that we want to do, and we're done. That's it. Could have got in again. Look, I told you guys to get out. Did it hit right here a second ago? Yes. You could have got in again right here for it to go back up. This is like cat and mouse game right here. And this is called ICT. This method right here of me putting both of these as support and resistance price action. So we would have been done, brother. We would have made so much money today on live trading. It would have been ridiculous. Now, will we have made money on gold too? Yes. Because we could have took gold going down or up, and we would have waited and made money on both ways. Pablo took it down, made money over here. We could have got back in. Anywhere around here, we could have got back in and got out. See, this was our place to get in at. So how many times could we have got in? I got on this call at 6 o'clock, but let's just say we waited for 6:30. We're not in yet. We're not in yet. It goes down here. Pablo took it down, though, but we would have got in somewhere around here, and we would have been up big money right here. That's something I mapped out way earlier. The Nas, we were looking at the heat map. We would have known Nvidia was going crazy. Everything was looking good. We would have took that straight up. We would have been good. SPX, the same thing. We seen that it was stalled out right here. We seen Nvidia's crazy. Almost half of the board would have been Nvidia. We could have took Nvidia up. 6:30, we could have been right here. We could have took it down or up. Down, it went right here. It went all the way down here. We could have made money. Up, we could have made money all the way here. But if we would have took this up, we could have been up here and getting out somewhere in this good area right here. Large money. So that's what I'm going to be doing. I'm going to be taking different trades for you guys. US 30, gold, NAS. You know, sometimes BTC will be hot. You know, because I'll get on like at 6 o'clock. I'll study everything for about 15 minutes. Then I'll study it with you guys for 15 minutes. And then we'll be ready. And then you guys can see exactly what I see, exactly what I'm talking about. And this is the way to really make a lot of money trading, is this opening bell. So look at this. We would have been out of this trade and it went back down. We might want to get back in. We might say, oh, let's get back in. But now US 30 is probably going down again. So we would take US 30 down again. Why? Because if we look at the heat map, Apple's starting to turn red. And nothing is green really. So even though it's going up, what do we think is going to happen in a second? We think that in a second, Apple, like if we take this right now, take this down, boom. Let's say you guys are on a live account, you take this down right now. Look how much money we would have made just off of volatility. As soon as it hit that line, what happened? I mean, you're talking about that's $20 it went down. $30 right now, it just went down in 5-6 seconds. You guys could have been out the trade again. But I would stay in this trade because everything was looking red. So this might go all the way back down to the green line. That's money. It went down $40 right now, just from in 10 seconds. That could have been our whole day's worth of stuff. If you had one lot on that and it went down $40, then you could have made $400 right there, just on that little call right there that I just called. And we already had it mapped out on here. We could have hit it once here, a couple times here to go up, right? Now it's down what? 50 bucks. It's down 50 bucks since 15 seconds ago. And you guys could have said, I'm done. I'm out of here. I just made $800 right now. I'm done. Why? Because we know how to read the heat map. We've seen that Apple is turning down. This is the most biggest one. Apple's turning back red. Look. So what do we think is going to happen on the US 30? It's going back down. So, yeah. You guys have any questions before we leave? Does this kind of make it seem like, give people hope that they think they're going to be able to really trade?
Yeah, absolutely.
Yeah. And this is big money. This isn't like pocket options, brother. This is big money.
Right.
You're making as much as it goes down, you're making the money as much as it goes up. On pocket options, we were making like 70% when we won and losing 100% when we lost. With this right here, you're winning 100%. Or losing 100%, winning 100%. So that already evens out a lot of the odds that pocket options was hurting us on.
Yep.
Should we get out of this trade going down? I wouldn't. Brother, it went down $50 already. I think it's going to still go down because the heat map is telling us that. The heat map is telling us, look, Amazon 1.5. So now you're talking about this covers up Walmart and Home Depot, but Home Depot and Walmart are actually negative a little bit. So this whole thing is almost turning red right now. This is the only thing that's really green, and this little bitty box is nothing. Yeah, it's going back down for sure. And I would probably get out like right around here, or I might get out on the moving average because this is like late in our trading day. Like we probably already made a lot of money. Like all we wanted to do is get in this trade because we were like, oh, it hit again. And we're out. Well, we just made $1,000 off of this, but already we made $2,000-$3,000 off of what we already did. That's a $3,000 day. Now you go to your job that you make $4,000, $8,000 a month, and you just made $4,000 in 30 minutes. How do you work that job, brother?
How do you just go different look on your face?
I know you're gonna be all happy and stuff. What happened? Oh, I just made $4,000 this morning in 30 minutes. Trading with my mentor. Man, everybody's gonna, huh? That's how much I make in the whole month. Serious, man. This is no game. Like you guys will have dreams. God will show you that you could push a button and just make money.
That's right.
And you'll be done.
Hey, Lonnie.
Yep.
Real quick, quick briefing about the PAMM accounts. How does it work? Real quick, quick steps.
Yeah, so the PAM account is up right now. It's up. Let me see. I think I sent it in here. I'll just finish my other book. If you guys want my next book, you guys can get it. Let me see if I posted it in here. Yeah, the PAM account is up 47%, and I didn't post it in here. Let me post it on my phone right here, and let me show you how it works. So basically on Tuesday and Friday, the PAM account is going to split the money, profit 50-50. And let me show you here. Okay, so this is the PAM account right here, the Autobot. And we have two different PAM accounts. We have one that I just trade the money, like on these opening bells and stuff. And then the other one is just, why didn't it post? Okay. So this is the PAM account. So for 8 weeks, it's been going, right? And it made 47% in 8 weeks. So just this month alone, from the first of this month, and it's only the third, it made 15 extra %. So what we're talking about, and right here is when the splits happen, fee days, Tuesday and Friday. The money's going to go into a separate account for you, all your profit, and it goes into a separate account for me for all our profit. We split it 50-50 right here. And so let's say you put $1,000 in, it would have made $500 in profit. So your account would be at 1,500, and then we would split the 50%. So you would have made $250. I would have made $250 off of that. So that's how the PAM account works. It starts off at $250 is the lowest you can come in with. And yep, that's about it. You have any other questions about that?
No, I'm good.
Okay. Yep. And then we have the indicators and everything like that. So let's go over that right before we leave. And look at it going down, you guys. Come on, we would have won again. Stop playing with it. Big money. Yeah, Freedom live streams. If we look at the products, and so this academy is free of charge now. If you get the indicator, so one indicator is $150 a month. Two indicators are $250. You're gonna get both the indicators that I'm looking at. This one and the other one, the EMA bounce. The EMA bounce is gonna give you more signals. This one's gonna make probably more money, but it doesn't have so many signals per day. And you'll be able to look at any trade that you want to, and you'll get those trade signals. Also, with that, you get the Telegram signals that happen all day, right? And you get the Academy. So you're going to get all the videos and things, and there's going to be some new videos uploaded. Right now, you guys could go to the Beach Trader. And Beach Trader, my channel is Beach Trader Bot.
This is a Beach Trader. I'm gonna tell you today how.
And we have our last playlist that we have. You can go to playlist, and this is the one right here: Beach Trader, TradingView, signals, and bots. So if you guys want to look at everything you're gonna get with,
Hello.
there's 9 videos here. So start off at number 1. And it says one of them's hidden. Let me see why that's hidden. So how to locate the Beach Trader indicators, optimize the color settings, how to switch between different trading pairs, how to set alerts up, right? Because you could actually have your own alerts up for different trades if you like, built into the TradingView instead of just waiting on the signals that I give you on the Telegram. Let's see. Let me see why a video saying one of these videos is not on here. Let's see. And then you can see like people that that was trading with me a while ago that was making money with me. It just inspires you. Or people, if you know anybody that wants to trade, you know, they like testimonies because that's what Amazon's about. So you guys can show them some testimonies. Okay, it says this is public, but why isn't it on? Let me see if it's on this playlist. It's on 2 playlists. Trading education. Oh, okay. It's not even on this. Okay. Let me add this one. That's number 1. And let me add number 2. And I want you guys to watch these videos because these videos are really important.
Okay.
Okay. So that might be, let's see. Let me go to the playlist now and see if all of them are here. Because it was missing number 1. All right, 9. Playlists. How do I click this playlist? All right, so perfect. So if you go to the Beach Trader YouTube, you can just click on and you can watch all these videos in a row. So hit videos and you'll see 9, 8, 7, 6, 5, 4, 3, 2, 1. Yep. So it does an overview of everything and it explains everything really good. These videos are dead. And here we go. So this is the whole thing, and you guys can watch these. They're little short videos, 5 minutes to 15 or 16 minutes. And it shows you everything about the signals and bots. That's what you're going to get. And you're getting the academy too. There's some MLMs and some different businesses that want to put the signals and the bots into their programs. And that could be a way for you guys to make extra money. Like there's this one Korean group in Orange County. They want to start an MLM using our signals and bots. And I could tell you guys when it starts and you guys could be at the top because it's going to be like a binary. And they're going to build it up crazy. And it's going to be based off of this and us trading. And so it's not going to be like just my academy. It's going to be their thing using my stuff. So I'll be like part ownership. But we'll put ourselves in this thing and let them build all under us. So there's going to be opportunities for everybody to make a whole lot of money. I know if Dave's on here. Let me see. Is Dave on here? Yeah, Dave's like my right-hand man. He's been with me since the beginning. So hopefully I could put him like in some kind of business situation with that too, for sure. But there's some teams and businesses looking into having us. So yeah, you guys, let's win together. And we'll do another one of these pretty soon. You guys just comment in like the WhatsApp of what you guys learned, if you guys thought it was valuable, so other people can start joining up with us. And let's win together, and let's get you on the PAM account to make money every day with us. And let's get you trading and on a demo account or on live. And because next time when we hit this, we all want to make money. Now, I don't trade on Mondays, so probably the next one's going to be like on a Tuesday. I might start doing like Tuesdays and Thursdays in the morning. And you guys can basically use the bots to trade all week long. And so it's gonna be really good. Love you guys. You guys have a great day. And today's my son's birthday, 22 years old, man. So I'm gonna be doing some stuff with him. I got the ministry coming on at 10. So I'll be preaching in the street. Then my son's birthday party. And then I think he has a night party. I don't even know if I'm invited to it. This boy is 22 years old. He rented out a big like mansion. But he might not invite me. I'm not even going to invite myself because I know he'll let me go, but it might just be for him and his friends. Love y'all. Y'all have a